Hello all. Hope you had a great week, trading week today. Today, I just wanted to bring you another video where you can understand which side market is trading. Hope yesterday's video helped. And if you are a serious pivot trader, and if you are a serious trader who wants to build your trading to next level, where what I mean is you want to make millions of dollars, millions of rupees, then this is the place for you. Watch all my videos. This is not a video for somebody who is looking for a tip, who is looking for some kind of strategies. No, this is this is a video where you will understand how market works. Watch all the videos by Raghav. You will be understanding those concepts. You need not pay monthly payment to some guy to know which side market will trend. Just by watching my videos, you will understand which side market will trend, and you can make your money, and you can achieve your dream of being a successful trader. All right. If you're new, please do share, like, subscribe before going further, because without your support, I won't be able to bring any of my knowledge to the YouTube video. So I definitely need your support. Even if it is a constructive criticism, you can pass on your comments, what I need to do or how I need to improve. I'll be more than happy. I'm an open-minded person. Right. Now let's quickly go ahead. So if you have gone through Secret of Pivot Boss, Frank Ochoa speaks something about initial balance. Now, what exactly is this initial balance is whenever a market moves for a brief amount of time, for first half an hour, first 1 hour, first 2 hours, it's going to create a high and low. And after that, whichever side it breaks, if it breaks high, market will continue in that direction. If it breaks low, market will continue in that direction. This is called as initial balance, right? Now, I just wanted to tell you that how many hours you have to wait or how many minutes you have to wait to identify the initial balance. It is subjective, right? Sometimes 60% of the times market will be range bound. Only 33% of the time market is in trendy. So in considering these statistics, how will you identify what is the right amount of time to catch this initial balance? Some pundits tell 1 hour should be the initial balance. Maybe it works in stock market, but I'm going to open your eyes, and based on this, you can trade any stock, any index, commodities, forex, based on this initial balance like a pro. Of course, you should know pivots. Now, I have released a lot of pivots. You can watch those pivots, enrich your experience. Now, what you're seeing is Nifty 50. It's an Indian index, right? Now, in this Indian index, it's a 15 minutes time frame. You have to go with a 15 minutes time frame. Yes, it's very simple. The first 15 minutes candle is the initial balance, according to me, based on experience. And as you evolve, you will understand why. And I'm going to prove it straight away. This is the first 15 minutes candle. Now in this first 15 minutes candle, the second 15 minutes candle was unsuccessful in breaking it. The third one was able to break it successfully. Now, what exactly I'm telling here is if the first 15 minutes candle is broken in the follow-up candle, the probability of market going in that direction is very high. And why I have marked R1 and S1 pivot is, you know, that as long as its price is between R1, S1, like S1 to CPR and CPR to R1, R1 to CPR and CPR to S1, it is considered as range bound. You need to understand this range bound. Now, the initiative participants or the smart money or big institutions will enter only above R1 or below S1. You have to understand this. This is a universal concept. Now here, price comes, okay, it is a previous day low. These green dots are previous day low. Yellow dots are monthly low and high, and I have some other dots for weekly low and high. That's all, nothing else on in the chart. Now what this is a sideway. Last 3 days we are in sideway. How do you, as a pro trader in a sideway market, what I mean is not sideway, in a range bound market, you will buy at the low, you will sell at the high, right? Oh, you understood this? Now here, watch first 15 minutes, second 15 minutes fails. This is the support, this is the support, this is a range, the big range for last 3 days. The third candle breaks the first 15 minutes high, so you have to think market will go up. That's all. If you want to scalp, if you want to make money, you need to think market will go up until unless you see a price action like this. Evening star, a reversal pin bar, doji followed by a red candle. Okay, this is a sign for you to exit, but you can make money from pullback till here. Watch this one. Below R1, first 15 minutes break the CPR, market goes to previous day low. Near S1, above S1, you know it's a support, it's a buying zone, and always in the uptrend. Once you have this wick to body engulfing candle, you know market is reversing, you need to exit. Now following this method, your stop loss will be very minimal, and based on my experience, almost 80% of the time, yes, you heard it right, 80% of the time you're going to make money. Break even money, but no loss. I'm talking about options. I'm a pure option trader, right? This is the secret. Now watch here. This is the first 15 minutes doji candle. The doji candle breaks here, comes down. This is a wide CPR. Now go back to my pivot lessons, and what does white CPR tells you? White CPR is a very strong support, and on that particular day, it's a range bound market. The moment you see this reversal wick, you can exit. You can make whatever money you have made here and stay put. Obviously, trading time frame will be on 5 minutes. Okay, I'm just showing you 15 minutes. After that, you have a morning star pattern. We have gone through these patterns several times. Market reversed, but here it was not a strong candle which broke. So again, it came down because of the white CPR. Watch this one. First 15 minutes, market goes down. We have a white CPR. Tries to break the lower CPR, you have this opposite reversal wick is a pause in the ongoing trend. So this was a strong red candle. Previous day was a red candle. So the downtrend is a pause. So whenever the first 15 candle is broken, market booms high. What is your catch? First 15 minutes candle is the initial balance. Balance has been broken. Above R1, smart money enters. See here, it briefly tests, goes sideways, boom, upside. Now here price itself is below S1. So you know when the huge gap down, but you have to wait patiently, market goes sideways, and you have, this is very important guys, if this happens in the first half of the day, by 11 12 o'clock you have a high probability of trend continuing. But if it is happening at the later half of the day, I mean, the way you need to make your money management on lot size should be half of the first initially. If you're planning to buy 100 lots, the second half of the day after 12 or after 1 p.m. you need to plan only 50 lots, right? Because if a market is giving trend, the trend will happen early in the morning. Very rarely it happens in the second half, and even in the second half, because of the market closing hours, it may not be a big trend. That is what I'm trying to communicate here. Now quickly see here, first half break came down, it just pulled back, right? Below S1, pulled back. It happens, but did it break the high of the first 15 minutes candle? No, again it came down. So somewhere, even if you have purchased at the low and market hits stop loss, and even a novice trader, you keep waiting, okay, market will reverse, market will reverse. Sometimes people wait, right? People who don't know how to trade. But just by watching 15 minutes, you have the probability at least to break even or minimally minimize your stop loss. Watch here. 15 minutes break CPR, central PO takes support. First 15 minutes is broken. It is above R1. You know, above R1 trend is always up. Market went up. This is above R1. The first 15 minutes where it broke almost towards the end of the day, you had a small move here. You could scalp big money there. Here from the central CPR, first 15 minutes broke. It comes down to S1. You can make money. S1 is a buying zone. You can exit there. Now here central pivot and S1 is broken in the third 15 minutes candle. So S1, below S1 is smart money. You have a strong move. This is again between S1 and CPR. You have a reversal pin bar, but it is at a lower CPR. Lower CPR breaks, market goes sideways because the initial balance itself is not broken. So you can identify a market is sideways, or you can just wait patiently, because trading is all about waiting patiently, not compulsive trading. Watch here, first 15 minutes broken, You know market is going to go down. If you wait end of the day, it went down. First 15 minutes above R1. Where did it break? Where did it break? It broke here. It's a sideways market here. But even if you enter and wait patiently, it will not hit you very badly. Minimal loss to minimal money. First 15 minutes, it breaks, go near the monthly high, it takes resistance, and then you have a sharp, in these 15 minutes, it went so sharp that probably people did not have chance to enter it until and unless you are trading it on a 5 minutes time frame, right? The moment the first 15 minutes is broken, any 5 minutes candle closes, you should enter, make the money. CPR, S1 buying zone acting as a buy zone, market went up. First 15 minutes candle break somewhere here, goes sideways, but it will never hit your stop loss. That's what I mean. Even if it hits your stop loss, say you entered here on a 5 minutes basis, the first 15 minutes candle is broken. What is your stop loss? Your stop loss is here, 10-15 points. What's this one? Above R1, it's considered as a trendy move, but market goes sideways, sideways, sideways. And this is called as mean reversion or mean revision. What exactly is mean revision is market goes, then the trend changes. And I have, if you watch the RSI, there's a strategy to identify this. I have shot a video. So market is above R1, above RSI 60 for a considerable amount of time. When the RSI 60 comes below 60, you know trend is shifting. What is the stop loss when RSI goes above 60? What is your target? 40. You can identify this. So whatever I'm teaching you, they're all independent. So imagine that if I'm making a 2-hour long video, which I have done, nobody will watch it. I was very disappointed when I tried to explain everything. But whatever videos I have done, 20 minutes or 15 minutes, if you watch continuously and understand the concepts, you are a master. We have a new successful trader who will be next venturing into YouTube or have their own Telegram or have their own individual courses, because you will start building your own trading methodology, because there's a zillion ways to read market. So if you are absolute, telling, okay, this is the way market needs to work, then you are going to go fail. Understand this one. Okay, watch this one. First 15 minutes broke below 60 for a considerable amount of time till 12 p.m. When the market goes above 40, sorry, below 40, when the market goes above 40, price is above S1, you know market is reversing. You know it's reversing. Above S1 is reversing. So when you use this concept, you will be able to understand which side market is going. Now here, first 15 minutes, break of first 15 minutes, highly volatile day. You know this is the previous day low. This should be your stop loss. And first 15 minutes is a strong pin bar. And first 15 minutes is broken. Trend is in only one direction. Even if it goes sideways, you should be thinking only to buy. Below S1, first 15 minutes, this is a reversal pin bar and this is broken. Okay, the candle is closed below first 15 minutes. If you keep S1 as stop loss, one side direction. HDFC Bank, first 15 minutes today, broke previous day high and market went in one direction. This is the first 15 minutes. It breaks near S1. It will act as buying. Market goes into sideways because the first 15 minutes needs to be broken upside or downside or mean reversion. First 15 minutes broken here, market tests CPR. Now, based on this, you can identify, okay, first 15 minutes is below R1. I don't know, I should target CPR. Okay, first 15 minutes is near CPR. It broke. I should target previous day high or R1. Now, these strategies you will make out. See here, central pivot, doji, first 15 minutes, the moment it breaks, R1 is broken, you have a big move. Watch, this is a very big 15 minutes candle, market goes sideways. Do not trade. The initial balance is not broken. It's a very big initial balance. When it breaks, it will give you few minutes. When you have a very big first 15 minutes candle, that means the balance is so high, it needs a lot of volume, either from buying side or from selling side to break it. And if it breaks R1 and S1, you have a Very strong trendy moves. That is what you need to understand. See here, very strong initial balance above S1 buying. Market tries to close below previous day low. No, it is impossible because this is a very big volume. And then with this candle, above S1, market is going to go up. See this one, initial balance, not able to close below, but it breaks above R1, market goes up. So it's stocks, forex, commodities, everywhere this is going to work. So in a nutshell, the first 15 minutes is the initial balance. Whichever side it breaks, using pivots, Cambrilla pivots, R3, S3 or R1, S1, you can catch the trendy moves. Hope this video helped. Thanks a lot. Please do share, comment and like.